We now proceed to the dialogue on the theme of this 58th session, so growth through innovation, harnessing data and frontier technologies for the economic transformation of Africa. And to set the scene for this discussion, it is now my distinct honor to invite the Deputy Executive Secretary of the ECA, Mrs. Hanan Morsi, to provide us with a comprehensive overview of current global economic trends, the resulting challenges, and their specific implications for the African continent. So let's welcome all the Deputy Secretary, Hanan Morsi.
Good afternoon, Excellencies, distinguished ministers and colleagues. Today I will give you an overview of current global economic trends and what they mean for Africa. What we've been seeing is an increase in the level of uncertainty globally, and the fact that the global economy is becoming structurally different than what we've built our assumptions on. This presentation tries to outline this change and shift in structure and what it means for Africa. So, to start with, I think the most important feature is the fact that the new norm we have is for the global economy is lower growth and higher levels of uncertainty. If we look at that chart here, you will see that the World Uncertainty Index reached unprecedented high levels in modern time. It exceeds basically what the levels of uncertainty that we've witnessed during the global financial crisis and during COVID. And what distinguishes 2026 from previous episodes is the compounding nature of risks. So we're not just dealing with a shock and recovery, but we are dealing with overlapping and reinforcing shocks and disruptions. And economic policy has to deal now with not just policy uncertainty and trade uncertainty as episodic events. We have to deal with them more as a structural feature of the global landscape. So the new norm is lower growth, higher uncertainty, and greater fragmentation. The second element is the fact that the cost of capital has been reset upward. And that means, and this is globally, and that means that every investment decision, every debt rollover, every infrastructure project now faces a higher cost, a higher hurdle rate than before. It's true globally, but this is particularly important and consequential for Africa where development needs are huge, and where many countries are still managing elevated debt service burdens. The other characterization of what we are dealing with is the fact that we have seen the global geopolitical fragmentation and conflict really rising. You can see here, the index of geopolitical risk indicator and how this has been really moving, from COVID to the war in Ukraine to the US tariff rollout to now with the Middle East war. And this, these geopolitical fragmentation and conflicts have implications in terms of trade, in terms of investment, that also mean that trade and investment and finance are increasingly shaped by strategic alignment, not just economic efficiency, as we've witnessed before in previous decades. And in such world, it means that Africa must navigate not just markets, but blocks, not just prices, but power. And this matters because fragmentation changes the distribution of opportunities as well as risk. So this, brings, it can open or close doors to issues of friend-shoring, near-shoring, but it can also mean that we have the opportunity to also position ourselves well, particularly with the strategic value in critical minerals, in energy transition, supply chains, and corridors. So fragmentation will not be neutral. It will penalize countries that remain passive, but it can also reward those that position strategically. The other thing, I think, part of what we were discussing with the press conference earlier is the fact that emerging conflicts risk a new wave of growth penalty on the continent. We already have seen, as a result of the conflict in the Middle East, we have seen increases in oil prices of above 30%. We have seen increase in the price of fertilizers by 35%. We've seen, and this is very important for Africa, increase in container freight rates of almost 17%. So with the war in the Middle East, the key transition channels will be, one, through disruptions to trade and trade routes and to supply chains. And this is key because the Strait of Hormuz is a key artery in the global trade. We have a third of the oil seaborne trade a quarter of that goes through it. And currently, it's not just a disruption, it's almost, a closure, structural closure of what its role is. So it's impacting, it's reducing, the shipping traffic and affecting the prices. And that takes us to the second channel, which is the surging commodity prices in terms of affecting oil, fertilizers, and this, of course, is going to feed through inflation. And the other element is that increase in uncertainty, what it means for tightening financing conditions, and availability and pricing. And the impact on African countries will vary depending on a number of things, including whether they are oil importing countries or oil exporting countries, in terms of close ties to the Middle East region, and in terms also of how much buffers and fiscal space they have. These economic impacts, and we've discussed some of this earlier, will mean that there will be inflationary pressures through these commodity prices. There will be increase in energy, transport, food, and essential goods. There will be increase on the fiscal pressures because now the cost of the subsidies that the government were doing will now be higher, as well as the increased cost of their borrowing or rollover. And it will also mean that the pressure on currencies, and that's why we've seen 29 currencies depreciating after the conflict. So even before the conflict, we have seen, of course, all the disruptions in the trade with the tariffs earlier last year, that continues now. And what we have been seeing is really trade relative to historical times playing less of a role in terms of a driver of growth. And this is, very different than what we've seen in, the 90s and early 2000s. You can see here how its, role in driving growth has been declining. But I think one element that we need that deserves attention is how there has been a bit of variation. It's not all the same. So we've seen that affecting more goods, but we've actually seen that the impact on services have not been that much. And this is an area, this is why when we had our expert discussions, I highlighted that there were one of the questions was about, okay, is it okay for African countries to have more reliance or a higher share of their economies coming from services? Actually, it can be a factor of resilience these days. And it can be an element by which we can, it can be less prone to all the, tariff conflicts that we've been having and the trade disruptions. So that's what we see in this chart here. Of course, we have also seen that the cost of external trade environment has been visible. We've already seen before that, with the US tariffs to Africa, it meant that the average US tariffs to Africa went from 0.7% to above 7%. And this is a huge shift, in terms of an advanced country becoming more protectionist against relative vis-a-vis African countries than historically. And this also, if we combine this with the implication of the war in the Middle East leading to an increase in surging maritime insurance premium by 9 times, particularly through proximity to the region, and 3% increase in insurance implies huge premium. So all this will have implication on, the trade, the cost of trade, and the patterns that we're going to see. Another element, and this is work that has been done based on Your Excellency's request, ministers, from last year regarding the impact of CBAM and what it means. And I think the teams here from RITD will be very happy also to answer any questions on that later if the ministers are interested. We've done work to really try to quantify the impact of CBAM on African countries, and what it shows is that the implementation of it could lead to a reduction of African exports of aluminium by about 14%, of iron and steel by about 8%, fertilizers by about 4%, and cement by about 3% of exports to the EU. The broader implications could be substantial costs on African outputs and competitiveness. So this is not marginal technical issue. It's part of a wider pattern in the change of trade rules and non-trade tariff barriers and supply chain standards. And this is, I think, precisely, it's one of the issues where, the Africa Free Continental Trade Agreement, this is why we must be understood as a trade agreement, but as a strategic economic buffer for such shocks. And we already estimate that the implementation of it will increase GDP and exports and imports through tariff elimination and reductions in non-tariff barriers. So in other words, regional integration can be an insurance policy against such shocks. Of course, we cannot be here without referring actually to one of the major trends, which is the key theme of this year, technological gap and what it means. So here we have, it's an area where this conference has been focusing. We'll hear and see a lot more discussions on this, but there is a great diversion in the world economy. May not come from just capital commodities, but from data, computing power, skills, and digital infrastructure. Africa accounts for almost 20% of world population, but only 2% of global data use. Internet access remains below other regions, as we see here, and the risk is clear. So we have a risk, but also an opportunity. So the risk, if we don't act, the risk is we have a widening development gap with the rest of the world. But the opportunity is we don't need to start where others did. Okay, we can actually turn our latecomer advantage to development into an opportunity by using that to leapfrog our development, to think differently and forward as development strategy. So this will, of course, we will talk a lot more about this within the conference and later. And the last element of these trends that we cannot be here without, of course, mentioning, which many countries have been struggling with, is the issue of climate shocks being increasingly frequent and economically costly. And this is not just a peripheral issue. This is something that we have been saying that need to be streamlined within the macroeconomic management. And here it shows kind of, the total cost of climate shocks and how it has been rising. Okay, so now having, had the overview of what is happening globally, what does it mean for us and what is the best way to deal with it? How can we turn this into action and opportunities? Of course, the first element of this is regional integration as Africa's best insurance policy. And here we need to look into when we talk about it, we need to look at what is hindering this. Like, why haven't we advanced as much as we would like? And a key thing that if we look deeper, Africa transport costs account for 40% of the final price, particularly in landlocked countries and poorly connected ones. I think that in itself tells us, if we need to do better, where we need to focus. Corridor studies show that in some African countries, clearance and waiting times consume 30 to 40% of total door-to-door transport time. That's another area where it's very concrete what needs to be done. Cross-border payment costs remain high among one of the highest among countries, and it really reflects persistent frictions in correspondent banking, FX conversion and settlement. So this hinders firms to integrate better to trade and for us to reap the benefits of this regional integration. If you look in terms of the opportunities and constraints to Africa, of course, the opportunities, one of the key opportunities is the fact that the continent has substantial level of global reserves and critical minerals of potential for both solar and hydrogen. And we need to make sure that we're capitalizing in all this to actually, for the transition to move to green industries, to have the global, to be part of that global energy transition, and not to do like before, not being importers of technologies and users, but actually being on the front line, leading that transition. And this is how we need to kind of shift the way of the development strategies to be forward-looking. A second, of course, is what we're talking about, the share of the youth. We are the youngest continent, and not only this, but we will continue to be, become a bigger and bigger share of global workforce. And this is, the most strategic asset for the continent. And optimizing that demographic dividend will mean that we can actually use the youth to, make the economy more productive, to improve the utilization of technology, and we need to do that by making sure that we're providing, the skills for such thing. We have the market, so we need to advance on, the AFCFTA as a platform for regional integration, whether through continental, market dimension, but also to make sure that we are utilizing regional value chains. And this we will talk about more, which is the digital leapfrogging and, the need to make sure that we're using this to do things better and leapfrog our development. Here, and this is, I'd like to end with this, is about turning constraints into strategic advantage. Focusing on energy transition, leverage with abundant renewable resources, enabling that, the leapfrogging of infrastructure, reducing energy costs structurally, and also to utilize carbon border adjustment mechanism, making the best out of our continental integration, through unlocking scale, enabling regional value chains, creating, negotiating leverage in global trade architecture. This will be key, especially in this world of fragmentation. Digital and physical integration to have smart borders, the digital trade facilitation, seamless cross-border payment systems so that we don't need to trade in euros or US, we can trade in our local currencies and reduce transaction costs. And finally, of course, with the youth as the accelerators of our development, making sure that they become our economic asset, targeted investments toward technology sectors, skill-intensive manufacturing. Thank you. you can already realize there are no breaks in ECA, so I'm asked to do the following presentation. And this is the theme of this year's conference, Growth Through Innovation, Harnessing Data and Frontier Technology for Economic Transformation in Africa. Of course, this is the theme that ministers chose last year. And we had, I have to say, we had really great interactions and discussions on this during the expert segment. And we look forward to the discussions in the ministerial segment. I think let me start by, what we know about the Africa's structural transformation gap. Basically, despite the relatively strong average growth Africa experienced, limited progress has been made in terms of productivity enhancing transformation. So if we look at average GDP since 2000 until now, the average is about 3.5%. If we look in the contributions of the various elements of production to this, we find that the contribution, total factor productivity contribution is close to zero. What does this mean? It means that we have been adding labor and capital with zero efficiency gains. And this contrasts with the experience of other regions. So this in sharp contrast, for example, with the experience of East Asia, where actually a significant part of their economic transformation was led by total factor productivity. So that means that we need to, it's an element where for us to do better, to have, to develop and to increase productivity, which means it will translate to higher wages and higher standards of living, we will need to do better in higher value addition, productivity, and use of technology. So, in terms of, let's perhaps look at the landscape. What do we know? Africa has been showing progress in terms of the adoption and progress, but if we look forward in terms of what is the potential, what we see here is that Africa has a huge potential in terms of productivity gains in using AI, generative AI across sectors, and particularly in retail, telecommunication, banking, mining. So there's a huge potential for us to actually use and integrate technology more in terms of productivity gains across sectors. But what is the reality if we look at in terms of the share of Africa in the funding of blockchain funding, payment system deals? We see that, yes, Africa has been increasing in terms of, the coming from a low level, but still lags significantly behind the rest of the world. So basically, we are talking about a global opportunity with frontier technology market of $2.5 trillion and is expected to become $16 trillion by 2033. But the reality is that Africa, with 20% of world population, has less than 1% of value capture. So for us, if we don't catch up, it means that that diversion will be even bigger. it means that without action, we will even fall further behind. So what is holding us back? Why impact remained limited in Africa? I think the core message here is that the issue is not just access, but it's about absorption and scaling. So if we look at, in terms of access, we have seen rising technology access. We have seen AI, digital platforms, and frontier technologies expanding. We've seen connectivity continuing to improve across the continent. However, that access alone is not sufficient to drive transformation. Structural constraints persist. We have significant skill gaps, low technology development in industrial activities, insufficient ICT infrastructure, weak linkages between research and development, financing, and productive sectors. As a result, this limits our absorptive capacities. That means that technology cannot be effectively absorbed into productive systems. Moreover, we have the issue of weak transmission to the economy. So we have, of course, an issue that we have been talking about from before, high concentration of foreign direct investments in extractives, where I've said that before. I think the appropriate analogy is that we have foreign investments in that sector, but basically we are exporting development opportunities when we export raw material without any local beneficiation or value addition. So this is one issue. Then we have also the firm level adoption of technology being limited, and we have the spillover across sectors weak. The result is that productivity gains remain shallow with no sustained structural transformation. Okay, so I think what I wanted to show perhaps are a few examples of technology adoption, both from a couple of examples from outside the continent and to home within the continent. And there are many others, but just for illustration. So from developed countries, if we look at the example of agriculture in Netherlands, AI-driven precision farming, sensors and automated systems reduced water use by 90% and pesticides by up to 90% since 2000 to present. It led to a huge increase in their agricultural products, and they are now the second largest globally. What is the key takeaway is that technology can compensate for issues of land and climate constraints, but can also improve issues of efficiency and resource limitation, which is an issue that is very relevant to Africa, particularly at the current time when we are exposed to repeated and frequent climate shocks. If we look at another example, which is Nordic countries and sustainable energy, we see their energy storage solutions, smart grids, and real-time monitoring, where this supported and improved their energy efficiency and resilience. If we look home within Africa, we have a very good example in Togo and how they used actually technology to better target social safety nets during COVID. Okay, and they have been, harnessing AI, mobile phone-enabled approach, and combined with satellite imagery to prioritize the most affected. And this is, this was a very good example that actually was globally featured as, a good practice of a government trying to do and use technology to make every dollar of their spending count. Another example, and there are many others, we're just doing these two perhaps for illustration, is one that we are as ECA involved in, which is the African Regional Transport Corridor Management System, which was, supported also with partners and together with countries. We have been doing digital application of satellite imageries and artificial intelligence to help with the monitoring and the operation of these corridors. So these are just a couple of examples from the continent. Of course, we've mentioned also earlier, Africa has strategic assets that position it very well for technology economy. The fact that we have 42 of the global youth in Africa and the average age of 18 years is a huge opportunity. The fact that we have renewable energy sources, we have 60% of the world solar potential. We have all what we need also from critical minerals, 30% of the world critical minerals. And I think one that we don't recognize enough is data as a, critical economic asset and the new fuel for frontier technologies that we can use to really accelerate Africa's growth, innovation, and social development. Again, the Africa Free Continental Trade Agreement should be the catalyst for technological diffusion. And here we have, first of all, we have the market scale with the size of the 1.5 billion consumers, the 3.4 trillion continental market. So there are incentives for firms to adapt and scale technologies. We have also the digital finance element where we have cross-border payment system that we've been working on advancing, and settlements in local currencies to enable digital trade across African markets. And third, digital platforms, trade platforms. And here, this would help connect African firms and facilitate regional supply chains. And doing this technology diffusion through regional perspective would lead to higher productivity growth and to structural transformation, exactly what we are talking about that the continent needs. So what are the policy recommendations on this? Of course, we start with the foundation, which is the governance and institutions. What do we need to do? We need to establish adaptive regulatory frameworks for AI, data, and cybersecurity. We need to also strengthen cross-sector policy coordination and implementation. I think this cuts across. I mean, we talked about this when we talked about, how do we respond to the impact of the Middle East crisis on Africa. We talk about this when we are talking about, technology and adapting technology for economic transformation. It's key to focus on making sure that we have this cross-sector policy coordination and implementation capacity. For skills, we need to fill the gaps that we have and expand STEM education and digital skills development, invest in research and development, and strengthen university-industry linkages. This will be very important. Promote inclusion of women and youth in digital economy. Third, on infrastructure and financing, we need to scale up digital and reliable energy infrastructure, mobilize innovative financing, and At a regional level, as we said before, leverage the Africa Continental Free Trade Agreement, the payment systems, and the trade platforms to expand market scale, harmonize standards, and facilitate cross-border digital financial flows. And finally, at a sector level, we need to be forward-looking in terms of focusing on green industrialization, leveraging Africa's comparative advantage and resources to leapfrog into these sectors. For services, developing digital platforms and fintech ecosystems, and of course for agriculture, increasing efficiency of use of natural resources and enhancing the supply chain and developing climate resilient agriculture. So finally, I'd like to leave you with the key policy issues that we're just suggesting for discussion for this ministerial segment, which is how can African countries leverage frontier technologies to accelerate productivity, growth, and structural transformation? What policies are needed to strengthen innovation? How can frontier technologies support the implementation of the regional integration? What financing mechanism can mobilize investment in frontier technology? And finally, how can education systems better prepare workforce for digital economy? Thank you for your attention.
Thank you very much, Deputy Secretary, for such insightful and back-to-back presentations.